Can I just get some indication of how many people? The artist is an artist called Ua, and the album is let me just type it in, is Amatora, and it's from 1998, and I was living in Japan at the time, and it's such a beautiful voice. So we've so if you can give me an indication, how many people here in this room today are completely new to order flow? Me, good. Tim, good. Anybody else new to order flow? Is it just Tim? Good. Newish, that's fine. Did you do the drills? Who did the drills? Yeah, right. The other thing is so who watched the first 40 minutes of the video one? Okay, so from the first 40 minutes of video one, all we're trying to really explain to you is the mechanics of how price moves, right? So price has to, okay, Brad, don't worry. You can go back to the other videos and practice. And Brad, if you need a bit of help early next week, just get in touch. But basically, the first 40 minutes of the video is basically trying to explain the mechanics of price movement, right? Because price doesn't, like, you don't see the ES at 2,000 and then 3,000 and then 4,000 all in the same day, right? It moves in a certain way. And that the way it moves is liquidity consumption. So can I ask, does anybody need us to go over liquidity consumption again? Do you understand the process of liquidity consumption from the video? If somebody needs explaining, I don't mind explaining it. It's absolutely fine. Okay, let's explain it. What I'm not going to do it in the same way the video does it. Okay, let me just pull up a depth of market. Right, where's it gone? That was strange. It disappeared. Okay, I might have shared the screen incorrectly. Okay. Let me just try and create another one. I'm just trying to bring up a dome. Okay, I've got it. And does it disappear when I bring it up here? Come on. Okay. Right. So you can all see the depth of market there, right? Yeah, the chat room, I will just answer that quickly. For some reason, 2 days ago, the chat room stopped working, and it's an SSL issue, which means a secure socket layer. It's the way you secure web pages. Don't know why suddenly it stopped working, but we're working with Amazon on that. So basically, what we've got on here, let's just take off some stuff that we're not interested in terms of liquidity consumption, right? So we don't need the alert column. We don't really need the snapshot. We don't need the order column. We don't need the LTQ column. We don't need the volume profile column. We could take the price off, but that would probably be much for most people, right? So what we have here on the blue background side, these are limit orders, right? So you can trade the market with a limit order. And when you trade the market with a limit order, you're effectively saying, I will, on the buy side here, you're saying, I'm going to buy at a specific price if somebody comes to me and sells to me, right? So you understand that when a transaction happens in the market, there's two sides, right? There's a buy and a sell side, right? There is, like, you can't buy something, even in these electronic markets, you can't buy something without somebody selling it, right? So these orders here are limit orders, and they're just saying, look, if you come to me and you sell to me, then I'll do business there. But this is the price I'm willing to buy, right? And they're considered people consider them non-aggressive orders because they're not in a hurry. They're just sitting there and saying, look, I'll buy this price if you come to me, right? If you don't come to me, I won't buy. And on the sell side here, these are limit orders again. They're just saying, if you come to me, I'll sell to you. But if you don't come to me, I'm not going to sell. And then these things in the middle, these are the actual executions. So what happens is somebody puts in a market order, for instance, to sell. They're going to end up selling at 48.50 because that's the inside bid. And basically what happens with liquidity is the market orders have to eat the liquidity before price can move, right? So if I've got 1 million bids at like, let's say I've got 1 million bids at 34.45, right? I would need 1 million market orders to trade there before I could get past that price, right? So people call the market an auction. People say, oh, it's an auction. I don't get that. I don't get the market is an auction because I've been to auctions. And when I go to an auction, I've been to car auctions. Somebody brings in a car and we all bid for the car, right? This auction, you've got limit orders to buy, limit orders to sell, market orders to sell, and market orders to buy. So it's like a four-way auction. And I don't know any auction that works like that. So calling this an auction to me, it's like a terminology people use to explain the market, but I don't understand the explanation. I don't understand how that explains the market. But what I do know is that these limit orders have to be traded away. Like this 300 here, we have to either trade 300 there or they have to pull their orders, right? Now, the funny thing is, if I look at the numbers here, these pink numbers here, these are actually the market orders that sold to the bidders. So bidders are buyers, the blue are buyers, these are sellers because they're pink, right? So it actually took us 57 contracts. We traded 57 contracts here, and then we moved down here and we traded 115. So what that meant was there was 57 contracts of liquidity at 34.50. And when that got consumed, we moved down to the next price, right? So one of the things is when you're looking at the dome, you're looking at the limit orders. And on the jigsaw dome, you're also looking at the market orders. Now, when we go to footprints, we're only looking at the market orders. But you don't need to see the limit orders to know how many contracts it took to get through a price. You only need to see how many orders traded there, right? So basically, limit orders are people who are saying, you can come to me and you can take my price. And if you don't come to me, then great, that's fine, I don't care. But also limit orders can be fake. And there are supposed to be some rules to stop people manipulating the market. But it's kind of funny that only really small guys get like caught, right? Now, if you look at that 1300 there that traded at 48.75, that's an anomaly, right? So actually, if you look, it took 57, then 115, then 69, then 6. And then we had this price where it took 1300 contracts to eat through the liquidity to get to the next price. And so just by looking at the number of contracts that trades at each price, you can actually tell how much real liquidity was there. So like this liquidity here, right? This could be real, it could be fake. People can pull out of the way. But like this 378, that's how much actually traded there. So they sold 378 contracts there. So on the bid side, there was really 378 contracts of bids that were real. Now, there might have been 500 bids there, but some pulled, but 378 were real, right? So we've got this. So the reason the market doesn't just jump around is because you have to eat through the limit orders to get to the next price, right? And what we're seeing now in this market here, what you're seeing is you're seeing different amounts of volume it's taking to eat through the limit orders, right? Now, to an extent, you don't actually need to see the limit orders. There's all this software now that, like, you know what I mean? And we've got it as well. We've kind of got a heat map that shows limit orders, but limit orders are not that important, right? If we, at the moment, if we come down to this price here, 34.50, you will see all the limit orders below 34.50. You will see massive size on the limit orders relative to what we're trading, what we've got on the limit orders now. And that is the same at any high or low. And you know what? It doesn't mean anything. It's just like it's a quirk of the market almost, right? So we can look at the limit orders and the market orders that actually execute, but the limit orders are fake. And you can get into, there are methods and a lot of techniques where you can actually use the limit orders. You can spot people spoofing the market and stuff like that. But the most important thing in trading is, where are people positioned, right? So if you think about it, right, if somebody puts in a limit order for 1,000 contracts, but they don't really want to trade 1,000 contracts, and we get there, we get within 2 prices of that limit order, 1,000 contracts, and it disappears, it's irrelevant, right? It's just an irrelevance. What's relevant is how much did we trade, right? Because how much we traded actually means there are positions there, right? Now, there's some other discussions that we can have, you know, which probably don't have time for today, about people exiting positions or getting into positions. But basically, the reason we're looking at footprints is because footprints is all about who is positioned where. Now, the other thing to remember is, like, if you're trading the ES and somebody, you know, and we see like 10,000 contracts trade at a level, and then we move up 50 points, and then you go back to where those 10,000 contracts traded, it's irrelevant because they're already out of the market, right? So what we're looking for in the order flow, we're looking for anomalies, basically, and we're looking for a couple of different types of anomalies. One anomaly is speed, like the speed at which it moves, you know, like it just zips in one direction, and that's momentum, right? Another anomaly is like this anomaly here, where we've got this area here where we've got, you know, 336 here, 302 here, where we see a lot more size trading than we've seen anywhere else. And that is another anomaly. And what you're trying to do is look at these anomalies and look for the really big anomalies and say, right, I can see that there was a lot of trade in that area, and that means there's a lot of positions in that area, and that doesn't give me it doesn't give me a 90% chance, a 90% probability trade, but what it gives me is a really good risk reward trade. So let's just say we trade 100,000 contracts on the ES across 4 prices, right? Now you could pick either side, right? But you know that when it leaves that area of 4 prices where those 100,000 contracts traded, as we leave it, some people are going to get stopped out, and the market's going to move right? So you could almost pick a side at random, right? Because if the market doesn't leave the area, then nothing's going to happen, right? So your risk is, so let's say you've got an area of 4 prices, you've got 100,000 contracts at those 4 prices, and you say, right, I think it's going to go up, right? Well, if it doesn't go up, right, then it's just, you know, if it doesn't go up, you have a stop loss just below the low, it goes there, you've got a few points risk possibly. If it goes up, you're going to possibly see an explosive move, right? And so a lot of people and all these emails you get, and you get them every day about like 90% win rates and all that kind of thing. It's all BS, right? So I know professional traders. I know a guy that can make. I know a guy on a good day with a news day where there's a lot of momentum, he can make 7 figures, right? Over $1 million in a single day, right? his win rate is about 50%, right? Because he's not looking to be right all the time. What he's looking for is opportunities where either there's some news event or there's a bunch of positions where there's so many people positioned in one place that if that breaks, it's really going to move, right? And that's really what Footprint's about. So when you look at the dome, yeah, the limit orders are interesting, right? So if you look at this 399, look at this 399, it's an anomaly there. If I wanted to front run that order, like trade in front of it, because I think it's going to hold, what I would do is I would look at these limit orders ahead, and I would want to see other people adding to those limit orders. And if that happened, I might trade in front of that big order there. But just that big order on its own, there's nothing stopping them pulling it, right? And there's nothing stopping them putting it there to fool retail traders into thinking, man, there's 500 buy orders there, the market's going to go up. And that's just a common game. Now, it's a game that's played at certain times, right? So they're not going to play the nudge around game after the FOMC announcement because the market's too volatile. But when you get to lunchtime, places like that, then the market's slow enough to kind of nudge around, right? But basically, the whole thing is these are the limit orders. They need to be traded away before price can move, but you don't actually need to see them to know how many contracts it traded to get through that price, because you've got that in the footprint and you've got that here. Does that make sense? Does that make sense, or do I need to go into more detail? Okay, so it's about liquidity consumption, right? And even though we are consuming liquidity, we don't need to see it, right? And the idea of doing the drills, there's a couple of reasons we do the drills. First of all, is so that you can actually see the anomalies. Second, so you don't get scared, because whenever somebody sees this, they just see numbers and they think that they've got to do some math with the numbers, like I've got to somehow add them up, right? But if you glance at this, you can see like maybe this area here, it was heavier on the buy side. And if you glance at it and you can't tell immediately which side is heavier, it's irrelevant, right? If one side isn't very much heavier and visibly heavier instantly, it's kind of irrelevant. So when we look at stuff like this, we're not looking for a 3% difference in the amount of contracts traded. We're looking for big differences. We're looking for anomalies, and those anomalies are what we trade. And what we try to do is we try to not make up trades because I've got 12 on one side and 35 on the other. Well, no, you can say, well, I've got 3 times as many here and as the other side because I had 35 and 12. And that's 3 times as many trades, but it's like 35 and 12 on a contract that trades millions a day, right? So the whole idea behind this is just looking at a different set of information and trying to see some anomalies. And you will be able to do it, but the mistake people make, the mistakes a lot of people make is they think the numbers are important. What's more important is the pace, right? So for example, somebody just asked me to make a live trade, and I'm not even prepped to trade the market, but we will do a sim trade, and we'll put the order column on. So somebody tell me. Let me just get the trade window up. Somebody shout out long or short. I don't care. Long or short. First person. Long or short. Long. Okay. So where's my trade window gone? Oh, excuse me. Okay. Let me take my live account off. So I'm going to go long a market order. Right. Now what we'll do is we'll recenter that. Right. So now what we're looking at is we're looking at the order flow relative to that position, right? So if the order flow relative to that position, I mean, right now, if you look at the amount of contracts traded, there's not really many contracts traded, right? So there's not really much order flow. So even though price is moving against us, it's not really, we're not seeing a lot of trade, right? Like 300 contracts. But if we start to see a lot of trade and price moving against us, or the bidders moving out of the way, then we can say, you know, we're not in a good position. So whereas a lot of people will look at price, only price to manage their trades, what order flow traders will do, they'll actually look at the size. I mean, the market's going to, you know, the markets are very volatile now, and they're going to go up or down. And the fact that, like, so you see there's a little push down now. We've got this little area here where you can see there's a little 159 versus 237. That's not the kind of thing you want to see, right? So we can say, okay, now you can see that the trades on the bid side are way bigger than the trades on the ask side. So that's the kind of thing that would tell you that your positions obviously is not safe, right? So it's a different set of information than just using price on its own, right? So that's really what using the footprints, what using order flow is all about. There's loads of different order flow tools, and basically you choose the one that speaks to you the most. You might use two. You might use footprint for long term, and you might use the depth of market for short term. But anyway, this is what we talked about on Monday. And basically, we wanted to get you a demo feed. And this is just typical. I had to ask CQG to double our demo feed allocation, which I've done now. So if you couldn't get a demo feed, you can now. And we wanted you to just play with it and have a look. And then we wanted to get you in the Jigsaw chat room, and the Jigsaw chat room went down. So absolutely perfect. But basically, yeah, you saw the pop down. So from the people who did the drills, did you start to see things in the market that that made you think you could have made a decision? Yeah. Okay. Sort of. Harry's, you know what, Harry and Pascal, that's the perfect answer. Nikki. So Harry's saying sort of, Nikki's saying yes or no, Pascal's saying not really yet. It is a very short amount of time to be looking at this. And I tried to trade reverse point of exhaustion then when the market trades the thin prints. That's good. You should try all these things. But basically, also, John, that's a great answer some of the time, right? So sometimes the order flow will speak to you and it'll give you a perfect layup. And if you're the kind of person who has to be in a trade all the time, but you shouldn't be trading, basically. But basically, as you move forward, what this is all about is actually getting to see these things that have a cause and effect relationship, right? Based on the number of contracts traded and people getting stopped out. So this is what we did. Now, some of you have seen it already, but it is still a very short time. It was only 4 or 5 days ago. We want you to see things you've never seen in the markets before, actionable things. And if you haven't seen anything yet, then what I want to do is get the guys and girls, sorry, get the people who haven't seen anything yet to sit with me on another meeting, and we'll just sit with it and go through it. If you have seen it, you don't need it. Now, the other drills are slightly different because you do the first drill, which is basically just watching the market and watching it move up and down. And we tell you to focus on momentum, and we tell you to focus on how easy it is for the market tick up versus tick down. And we also tell you to look at different markets, because some people get on with fast markets better than slow markets, right? Also, just a little bit of information. You will be getting an email from Axia shortly, just to tell you how you get onto their part, right? But what I want to go through right now is the top mistakes that new order flow traders make, right? So we talked about the pole dancing analogy in the last meeting, where we said, you know, the markets actually move up and down. They don't move sideways over time. They literally can only go up or down, right? So there's a few things that people do when they get an order flow tool. One of the things that some people do is on day one, they get the order flow tool and they start trading it, right? Now, if you think about what you've done, if you've and Richard, great. I haven't seen anything I don't already know. That's brilliant. That's a great thing, right? What I've had some people do is they'll go live on day one. So they'll buy the tool and they will think it's like a magic bullet that doesn't like need some training. It's like riding a bicycle, right? So it is a skill. So as you go forward over these 7 weeks, you will learn a skill. And that's the reason it's 7 weeks. It's not because we've got 7 weeks of material. It's because we know that if we give it all at the front, you'll go through the whole thing in a weekend and then you'll try and use it. So it's a skill, right? So riding a bicycle, it's not a particularly difficult skill to learn, right? The other mistake people make is they go full TA, right? So basically what they do is say, oh, like it's order flow. So I'm now going to look for every order flow indicator or flux capacitor or whatever order flow indicator is guaranteeing me a 90% hit rate. And they add more and more and more order flow indicators, thinking that somehow that's going to help them make better and more consistent decisions. Now, the problem with that is the more things that you add to your screens, right, the less consistent you can make decisions, right? So if the more factors you're bringing into your decision-making process, the less consistent you'll be, which is why the traders at places like Axia, they actually keep it simple. You know, they will look at they will look at long-term stuff at the start of the day. They will look at what news is coming in. But when it comes to like making the decisions, they try and keep it simple because less is more. The thing's going to go up or down, right? And so if you keep adding things because you think it's going to help you get this magical 90% win rate, that's not going to happen, right? What you need to know is where are people positioned, and is it trying to break one way, and or is there just a trend and there's a path of least resistance, and how can I get in on that trend? How can I refine my price, right? And then there are setups, of course, with order flow as well. There are certain order flow setups, but basically you have to keep it simple, right? I mean, there are footprint charts out there that I look at, and it's just like looking at the dashboard of a 747. It's ludicrous. It's a lot of information, but how do you consistently make a decision if you've got 3,000 data points, right? It's really difficult, right? The other thing mistake people make is they create a one rule trading system. So one of the things that is the easiest thing to see in order flow is an iceberg. And an iceberg is simply when you see, let's say you see a bid and the inside bid's 100, and then 100 people sell into that bid and the bid's still 100. Well, how can it still be 100? It's because they added 100 and another 100 trade and another 100 trade and another 100 trade, right? And people see that and they say, wow, I can see that. And sometimes that holds. But the problem is they throw everything else away. And what they do is they create a trading system that says, I am going to jump in front of icebergs, right? That's it. That's the trading system. So you go to a prop firm and they get people on they'll teach for 12 weeks. And then that guy in that prop firm, it might take him 6 months on sim to earn his live account, right? And then you've got these guys who look at order flow and say, I'm just going to jump in front of an iceberg, right? So realistically, if that was possible to jump in front of an iceberg and make money, the prop firms wouldn't do the 12-week training program, and it wouldn't take the prop trader 6 months to get his live account, right? So what you want to do with order flow, generally speaking, is if you've got some stuff that works, you want to enhance that with order flow, but you can't put lipstick on a pig, right? So if you've got nothing that works, then don't try and enhance it with order flow. If it doesn't work, it doesn't work, right? The other mistake people make, which is more prevalent nowadays, because of certain companies selling certain techniques, is front running large depth. So you see like if every bid is 300 and then there's a bid of 1,000, you put a buy order in front of that bid. And I can tell you, man, that is a guaranteed losing system, right? Because they're putting that order in to make you put your bid in front of theirs. They're doing it for that reason. That's why it's there. And there used to be, in the stock markets, you used to have level 2. And level 2 was brilliant because what you would actually see each market participant. So you would see Goldman Sachs, you'd see HSBC, you'd see Bernie Madoff, before he went to jail. You would see, and so what you would see often is you'd see Goldman coming on the bid, and then everybody would buy, and price would go up, and then suddenly Goldman would pull the bid, and they'd be on the offer side, and all those people that are buying, Goldman would suck up their buying because Goldman actually wanted to sell, right? And that was the game. And the funny thing was, people fell for it every day, which is kind of bizarre, but that was the game. And you could see when certain participants came into the market, everyone was running in the opposite direction. Now, I can't remember the year, but I think it was about 2005. All of those market makers with their GSCO for Goldman Sachs and HSBC, they all disappeared and they all started to put their trades through an exchange called Arca. So all you could see was Arca. You couldn't see the participant anymore. And they did that because somebody else figured out they were screwing everybody basically by putting in these big bids and offers. And somebody figured out how to beat them when they were doing that. And it just stopped, right? So large depth, it's always been a game, right? Large depth. And putting a bid in front of large depth just because it's large depth is stupid. But there are some other things you can take into account. If the market is in a big run up, especially after big news, and there's a pullback, and then the market's moving up and there's a pullback down and there's some large depth, and then in front of that large depth, people start to add more and more contracts in front of that large depth. That's a better probability trade, but it isn't a one rule trade. It isn't a one rule system, right? You've got the fact that some news drove the market up. You've got the fact that you're reading a pullback that probably looks weak on the order flow. You've got the fact that you've got the large depth. You've got the fact that other people are front running it, right? That's kind of like a multi-dimensional trade. You're still not going to be right all the time, but it's a situation where if you are right, the market's going to pop, right? And that's really what the prop trades are doing. But the idea that you can suddenly adopt order flow and say, I'm just going to trade that one individual thing, that is not going to work, right? It's not going to work. But trading requires multiple disciplines, and it requires you to think about multiple things like who's positioned where. Has the market got pace in one direction? Did everybody, have we gone long, and has there been a market spike to the upside where everybody's basically, bought for fear of missing out, and now the move's done, right? So don't use order flow to create a one rule trading system. You're going to get setups from us, and they will not be one rule trading systems. Now, the other thing people struggle with is that order flow is about experience, right? And people will say to me, can you give me specific numbers? So sometimes I'll say to people, you want to look for when the market seems faster than normal. So sometimes you look at the S&P and it's a really slow start. And there's other times you look at the S&P and it's really fast start. Now, sometimes people will say, well, how many contracts per minute is a slow start and how many contracts per minute is a fast start? And the answer is just watch it. Just watch it. If you watch the open every day, you will understand what's slow and fast, right? So you can't, it's like an experience thing. You can't write a book on how to ride a bicycle, right? You have to kind of teach somebody and stand behind them and push them. So basically, normal speed, high speed, it's partly experience of watching that market. It doesn't take a long time to pick up what's fast and what's slow. And the analogy I would use, it's a bit like crossing the road, right? So when you cross the road, you learn to cross the road. You are judging cars coming from both directions, and you're judging the speed, and you're figuring out if you can actually get across the road without getting hit by a car. Now, there's a lot of physics and maths behind that, which is basically done by your subconscious mind, but it's the same thing, right? I mean, is there anybody here that gets run over every time they cross the road? I presume not, right? Because you've just learned to do it. So it's the same thing. So, people will tell you about concepts in order flow, and then some people they just want to know the exact number. What's the big trade on the S&P? Well, if it's December, it might be a 300 contract trade, right? If it's September, it might be 1,000 contract trade, because the market changes gears. And so part of being an order flow trader is recognizing those things. And I know a lot of people get scared of that, right? But it's basically the way you learn everything, right? So people get scared of this, but you've got to remember, the people that came onto the footprint court came onto it because they're looking for something, and they're looking for something legitimate. And what is legitimate is actually getting used to the markets and watching them and looking for particular layups, and also understanding that different days will be slower than other days, right? So on a slower day, you look for smaller numbers. On a faster day, you look for bigger numbers, right? The other issue people have when they come to order flow is throwing everything else away, right? Now, like I said, you can't put lipstick on a pig, but if you've got some things that are working for you at the moment, what you need to do is try and integrate the order flow to that. And so don't think about, because we don't want people constantly restarting and resetting, because, I've met, it was a couple of years ago now, but within like 1 month, I met 3 separate people who had been trying to trade for 20 years, right? And I said to them, what have you tried? And they said, everything. And I said, no, actually, what particular things have you tried? Oh, lots of things. And they actually didn't know what they'd tried. And then I said, well, what worked for you and what didn't? Nothing worked. And they're just taking this approach basically where they learned something, they tried it for a little while, didn't really give themselves a chance to learn, and then they maybe traded it live a little bit too early. It didn't work, they threw it away and started on something else. So we really don't want people to keep starting again. We want people to have an honest inventory of what they've got right now and say, well, actually, this thing I'm looking at works. Because I can tell you, we've got, I work with people like Gary Norden who hates technical analysis and thinks that price levels are nonsense. But you cannot deny on the index futures that yesterday's high and low, overnight high and low are significant and do hold a lot of the time. And it doesn't happen on wheat, but on the index futures, there's so many retail traders that does happen. And if you're using something like that and you're having some modicum of success with it, blend it in, right? So don't go on this footprint journey and say everything else I've got is useless and this is good. Keep what you've got, but just be honest with yourself about it, right? Steve, you're saying Steve Lee's a good example. He's got a great webinar that we did. Steve Lee came to me looking to buy an additional course from Jigsaw, and I refused. I said, I can't stop you from buying it, but you shouldn't, because you keep learning new things. And at some point, you got to stick with one thing. And he did, and he became profitable. And that's really what trading is all about. So you do have to have an honest inventory, but also this is about enhancement. And so next week, as you get onto the Axia course, learn what they're telling you, use the setups they're telling you, but also don't throw everything you've got away, right? And if you want to come to me and have a discussion and say, look, Pete, I'm getting this from Axia, but I was doing this before, and how do you think I can blend the two? I am absolutely, perfectly happy to have that discussion with you, right? Absolutely. Because if you keep starting again, you will never succeed, right? You will never succeed. It's the main reason people fail at trading, right? It's starting over again, right? Now, I've talked a lot because basically I don't want you to make the mistakes that I see a lot of people make with their trading that kind of guarantee them to fail over and over again. But I do also want to make sure you're ready for next week. So, questions. What are the questions? Who needs help? Footprint chart will be out on the 27th when we give you the footprint, the first footprint education package. So we're timing it with both. And the reason for that is just simply because we don't want you looking at it. We want you doing the drills first, right? Because, you know, I've had people call me and say, oh, Pete, I really love what you do. I spent the whole weekend watching all your videos. And it's like, I don't know, 30 hours or something like that. And it's just like, you can't retain it, right? So, you know, so we're trying to avoid you cramming. What I would like to do, if you, I'm going to give you a link, right? If you're struggling at this point, use this link and it's going to give you the opportunity to book a meeting with me. I'd rather answer some questions here. So if you, let me just look at the Q&A. Right. Explain vacuum. Okay, let me get that back. Let me get that done back. Right. Okay, so explain a liquidity vacuum. It's not really important for this, right? But if you see the bids here, you can see bids about 45. Do you see any bids up here? Can anybody see any bids up here? Type in no, yeah, because there are no bids above the inside bid, right? That's the inside market, right? So what happens is when a market moves up, especially when a market moves up very rapidly, it takes time for bids to be put in at those prices, right? So there are no bids up there right now. If you look down here, there's bids down here, but just on this particular, the way I've got this set up to just show 10 bids, you can't see them. But there are bids, loads and loads of bids below, but there are no bids above. So we have this concept called the liquidity vacuum. And what it is if a market spikes up really, really quickly, it takes time for the bids to fill in behind that move. And we call it a vacuum because it's a relative lack of bids. And what it can do, it can cause the market to pull back. So you can sometimes see a spike up and the market pulls back because the bids just didn't get filled in yet, right? And different participants will add those bids at different times. So Fawad, I hope that's the right explanation. Does that make sense? It's just there's no bids above, there's no offers below the inside price. They have to be put in by somebody, and they're not there. How does it work? The basic will allow to watch footprint is only for advanced. No. Everybody's going to get the footprints. You know, you're going to get so on the 27th, you're going to get the first. You're going to get the first 6 hours of education, and you're going to get the footprint charts, right? We don't want you trading live, right? It would be a mistake. It's a learning journey, right? Is journalistics work? Does journalistics work only for the paid version of advanced order flow? Everybody gets journalitics. There is like an enhanced version you have to pay for. But yeah, you'll get journalistic stats. But again, I wouldn't worry about your statistics at this point in time, right? Because you're on a learning journey. One of the problems I get with some of the people that do the drills, some of the people that do the drills actually come to me and say, you know, at what point when I do these drills should I be profitable? And the answer is never, because the cut and reverse drill forces you into the market all for like the whole period of time, which would be stupid to do. And some people try to be profitable at it, and that's kind of like, that's not the problem. But the problem is when they're not profitable, they're beating themselves up And what, as you go through this journey, what you need to be doing is, as you see yourself move forward, pat yourself on the back, right? Give yourself, I don't know, buy yourself an ice cream, whatever it is, right, that you like, you know, go and watch a movie, but pat yourself on the back. What you don't want to do is take a drill or an exercise or a learning experience and that is tailored for you to be terrible at it at first and beat yourself up, right? It's just, people do it, and it's just not going to help. So basically what we're looking for you to do, don't use journalitics. Don't look at your trade stats as you're doing the drills and stuff like this. Look at how you're making better decisions, right? Like the cut and reverse drill is all about noticing the fact that you always reverse in the wrong place, right? And then over time, you'll reverse in better places. And that's what you should pat your back on. You know, you should pat yourself on the back. It's got nothing to do with P&L, right? Question from Brazil. Hi, Salvio. See many active videos with footprint, mostly in the 5-minute time frame. We're doing time frame footprints initially. We will do tick and volume based, but to be honest, it doesn't make a big difference, right? So one of the things we talked about in the first webinar, you can look back at any day and find the perfect time frame for the footprint that would have just given you the best signals for that day. But there isn't one. There isn't one that you can pick at the start of the day. It really doesn't matter. It doesn't matter what your time frame is. You don't want, if you're trading intraday, you don't want a 1 hour footprint. You want like 5 minutes, 10 minutes, 3 minutes, 1 minute. You want something fairly short term, but it won't make a tangible difference to your results using a different time frame. Right, you're looking at the same information, and like I said, with footprints, it's going to move up and down, and it's going to overwrite and add to the numbers. And you know, as long as you know those numbers are recent, like if it's a 5-minute chart, you know every number on that particular footprint is within the last 5 minutes. That's all the information you need. You know those positions that potentially are there are 5 minutes old, and then if you look back 2 hours ago, you know those positions are probably not there anymore. So I wouldn't worry about time frames. I mean, I'm not a big believer in time frames. I've always used a time frame that lets me see the morning, because I trade I've always traded the ES mornings, and you know, gosh, 5-6 years ago, it was between a 600 and a 900 tick chart that would show you the whole morning by the time you got to lunchtime. And that was what was important to me. So, you know, when you look at 5-minute, 15-minute, all these different time frames, you've got to ask yourself, why are these time frames important? The market's just moving up and down. It's not moving in time frames, right? So I know it's not, a lot of people don't agree with that, but I would look at time frames as something as kind of an irrelevance. You're watching the market move up and down. If you use a 5-minute or a 6-minute, man, it's not going to make any difference, right? It really won't make any difference. Should one view charts while learning order flow? Well, if you're doing drills, no, you shouldn't use charts at all. But we're not order flow purists where we say you can't use charts. I mean, if you're trading the S&P and you're coming to the high, you know, the 52-week high, you should know that, right? And you need a chart to tell you that. The DOM's not going to tell you that. So I wouldn't go for, you know, 6 screens of charts, 1 million indicators. My rule of thumb is for any single instrument, everything you need should fit on a single monitor. So if it doesn't fit on a single monitor, you know, so if you need 2 monitors for one instrument, you've got too much stuff. So you just got to decide which ones to use. And it really doesn't matter, because you're just trying to limit how much information. But there's, you know, the drills are to teach you how to read order flow. But once you start to execute order flow, there is absolutely no reason you shouldn't have charts alongside it, because footprints are charts, right? Yeah, a good, very good comment there. my God, I'm going to have trouble. Homira, I hope that's about right. Journalitics is meant to help you improve, but you don't want to, you need to get, so in a prop firm, it's 25% theory, 75% practical, right? But they're not trying to get you to be profitable in the practical. It's after the course where you get onto sim and you try and then you've got to earn your live account. So I wouldn't use journalitics as you go through this process, because this is a learning process. It's not a process of increasing P&L as you learn. It's a process of getting better as you learn at recognizing certain patterns and recognizing those patterns early enough that you can actually exploit them and make some money. So if you start off with this, examining your P&L, it's going to be poor, and it's going to be a negative experience, right? So you've got to think about this. How do you make learning to trade a positive experience, right? Well, you pat yourself on the back for the advances you're making, and you don't try and go full P&L before you are really ready to do it, right? So it is a tool for improvement, but you know, don't go too early. What do I use when trading the S&P? My trading's taken a backseat for the last 6 months just because of developing all these charts. But basically, what I will use, I use the Dome. I will use Vista so I can see the morning. I will use a couple of the. Let me show you just very quickly how I'll set it up. So it'll be set up like this. I use some of the power meters. Let me just find power meters. Where did they go? Is that my power meter? Just try this. Oh no, it's over there. Okay. Right. I use a power meter. Usually just trade. Sometimes I use the snapshot a little bit, but basically I use that. I use time and sales. I'm not going to put time and sales up, but the key things I do is I have a reset on new position, and I have a recenter on new position. Let me just find the properties. Okay, trading, the power meter, close outstanding orders, clear current trades on new position, recenter on new position. Okay, so what I do, this is mostly what I'm looking at. I do look at the Vista chart because I want to see the circles on the Vista chart, because I want to know where the where large trades occurred. But just open that Dome, so we don't have much information on there. So what I will do, let's get the live account off there. Lord, right. Okay, there you go. Oh, I didn't close that trade out. Okay. So what I will do is, you can see this meter here is telling me the amount of trade on the sell and the buy side. And then I've got these current trades here. If I buy now, what you'll see is everything recentered, and this recentered as well. So this reset. So what I'm looking at here now is I'm looking at these numbers here, and I can see there's a slight imbalance to the buy side, but really what I'm looking for, I'm looking for like 3,000 on the buy side, 2,000 on the sell side, and the market moving up. If it's like a couple of hundred each side, it doesn't mean anything to me. But what I want to see is, I want to see an imbalance on my side, and I want to see price move up. And then there's another thing that we look for, which is kind of like stickiness, which is, I don't know if you've ever done this, but if you've been in a trade and the S&P moves up like 4 ticks and then comes back down, and moves up 4 ticks and comes back down, and moves up 4 ticks and comes back down, you're done. Basically, it's the market telling you it can't stick at a price. So that is effectively what I use. But I'm not so interested in price levels per se. I used to be. I used to do pre-market prep on one of the futures forums, but I actually found that I didn't actually need the levels. I was doing the prep and putting the levels on there, but I just found I didn't need them because I was putting trades in different places. So that's effectively what I use. So you can see now we've got an imbalance. We've got 1,200 buys, 900 sells. We haven't gone anywhere to the upside. We've gone to 39.75. We really need to push through that price now because it's only gone up. It's a volatile market, it hasn't gone up much. Okay, so now we're starting to push through. I want to see some size. I want to see some size on the buy side. And we're seeing a little bit of that. And really that's what I use, and that's what you're going to get from the trade management part of the footprint. Okay, hope that makes sense. Footprint charts don't really show you iceberg orders, but to be honest, if you think about it, an iceberg order occurs because you get to a certain price and the bidders or the offers keep adding volume, right? So let's say you might be pushing up here and we've got 108 here, 237 here, 63 here, and then suddenly, because there's an iceberg order, you see 2,000 contracts, right? Now, does it really matter that was an iceberg order, or does it matter that 2,000 contracts traded? So to me, it's interesting that it was an iceberg order because they were kind of trying to hide, but why wouldn't you try and hide? But also sometimes people just put the bids and the offers out there. So footprints don't show you iceberg orders, but they show you where the positions are, and that's why you're trading. And so it's just a different set of information. Right. For momentum, quick in and out. No, well, do I use levels for? Okay, so when I say I don't use levels, the levels I like to use are these, the levels on the footprint chart. I like to see volume build in an area and then kind of escape and come back. So to me, 39.50 is probably a level. I don't know if it holds, but I do know if it. But so that's, to me, it's kind of, I like to use levels that develop based on the volume intraday more than what somebody traded yesterday. Okay, we're kind of getting off topic a little bit here. Now I'm going to go to the chat because there's questions on the chat. Right. So what separates noise from non-noise? Right. There is no noise in the market, right? It's just trading, right? All that's happening is trading. There is no noise. But what happens is you'll get certain setups that occur and you'll have a particular thing that you're looking for. And sometimes you'll see it, but it's just barely there. So you've kind of got you're looking at your rules and you've got your setup and you can say, yeah, that's kind of my setup, but there's a gut feel that says it's just not a very good instance of the setup. And then there's other times where it's just a complete layup, right? So you're looking at this now and there really aren't any anomalies. And so you just wait for the anomaly. You just wait for the layup, right? The worst thing you can do, I mean, so we've traded 300 there, for instance, and we didn't get through it. So if we go back to that 300 and we can't get through it again, well, okay, so nobody traded it. Okay, so now I've got my eye on that 300. I've got my eye on that price. I want to get through that price. If I don't get through that price, I'm out of the trade, right? And it's the same with a lot of trade entries. See, we still haven't really escaped it. I want to see it like a little 4-tick boost. But basically, what you're looking for is you're looking for the bigger obvious signals, right? So if I trade 50 one side and 49 one side, it's not noise. It's just not interesting, right? So yeah, looking at this, there's a lot going on, but nothing of interest. Well, if you look here, this is where we traded at 300, and now we've traded 521 into the bid. So we can see some sellers coming in. So at this point, right or wrong, I would say that trade's done. Now we could pop up, but if you have a set of rules and you see something like that, and that's one of my rules, I will just get out. I don't care if it goes up after I get out because it's got to go one way. So I wouldn't look at noise and non-noise. What I would look at is you've got your particular things you're going to look for, and sometimes it's going to look better than other times, right? Sometimes you're going to get in and this one's a doozy, right? This one's definitely going to work, and it works. And sometimes you haven't had a trade for a while, and so you just get into the market because you're trying to fit what's happening to your rules, right? But yeah, a lot of this stuff, you're just ignoring it because you're waiting for something to happen. Do you prefer lunchtime trading or after 10? I like to trade before the open, at the open and until it fades. So sometimes it fades at 10, sometimes it fades at 11, but once it fades, I'm out. Okay, so off best question. Why isn't module 3 or 4 available to you? I don't understand it is a logical sequence into. Because I don't, well, one of the reasons is we don't want to give you too much to learn yet, right? But if you guys all want to overpower me and say, man, we've spent all this money, we should get modules 3 and 4. And if I get more than 20 emails saying from people who bought the footprint course saying we think we should get 3 and 4 as well, if I get more than 20 emails, I'll give it to you. Right? Is that fair, Richard? Okay. If not, I don't know. If I get 90, and I will be honest, by the way. Yeah, Steve Lee, I decided on 5-minute chart a year ago, and it's all he uses, and it seems to be decent, right? Oh, and I've pronounced somebody's name correctly. That's brilliant. Richard, the 3 and 4 question, I saw it. It's in there 3 times. Footprint charts won't have a visual of iceberg orders, but we are building that visual into the charts. So you will be able to add that as an indicator to the footprints. It's just going to come a little bit later on, right? Do I consider micro ES as a good starting point for small accounts? It's okay. There's a few different opinions on this, man. If you ask Gary Norden, he will tell you the micros are for losers, right? Because you're basically trying to lose the whole point of the micro. It's got the smallest tick value, so you're trying to lose. You're actually saying I'm trying to lose the least amount. What I think, the way I would put it, you've got a few different options. You can trade sim at first, and you will grow out of that because you will not be disciplined enough to trade sim properly unless you do something that most people will find horrific, which is you show your wife or your partner, if you're not, or whatever, your life partner, unless you show your wife or boyfriend or whatever, your results at the end of the day. You need an account. If you're trading a sim account, you need an accountability partner, right? Otherwise you can just reset it, right? Next level, I would say, is something like a combine, like Top Step Trader, Earn to Trade, one of those things. Not particularly because of the funding that you get, but because it gives you skin in the game without risking money, right? So you actually have a goal, right? And then I would say, once you get past that and you say, and you've got to the point where you think you might have said, well, I've done enough combines now, I need to get some real money, then do the micros. But what I would say is if you move from sim to combine, your performance will go down. If you move from combine to micros, your performance will go down. If you move from micros to full ES, your performance will go down. So in the professional world, when people increase risk, it always impacts their performance. It's not a permanent thing, but it's also not something to stress about, but it will impact your performance. So I think the micro ES is like a step along the process. And I think the other benefit of the micro ES is it lets you trade multiple contracts, right? So it's really difficult to trade one contract all in, all out, right? It's really difficult to trade. So if you look at a prop trader, they might get into a trade with like 10 contracts and it starts going their way and they add some more, right? Now, if you're trading the ES, $50 a point might be a lot of money to you and you can't afford to put more in. But if you trade the micros, you can actually start working with scaling concepts. And I think that's one of the benefits of micros. But if you're just using the micros because you know you're going to lose and you want to lose less, you shouldn't be trading them, right? You've got to think about why you're using them. And then the other thing is you need a plan to get off the micros, right? So I spoke to a guy the other day and he's very confident now. He's done his combines. He wants to go live. And I've said to him, right, what you've got to do, you've got to write yourself some rules that say, if I do this over the next 20 days on my sim account, I'm going to let myself trade live at this level. Now, when I'm trading live, so first of all, I know when I trade live, my performance won't go down, so I'm going to account for that. But if when I'm trading live, I draw down this much, I go back to sim, right? And it's the same with the micros, right? So you have to have some kind of path where you say, at this point, I go to micros. When I can get to this level, I go to the bigs, the minis. And so you've always got like some kind of path forward, and you've got to stick to it. You've got to stick to it, because that's what they do in prop firms, right? They will give you a set of rules, and what they do in prop firms is a little bit different from the companies like Ernst Trade and Topstep. If you've got like a $300 a day target and $1,000 loss limit, and then one day something really catastrophic happens in the market and you lose $3,000, in like a bricks and mortar prop firm, they won't put you back onto sim. They'll say, look, it was a really bad day, everybody got caught, we'll make an allowance, right? So you can build things like that. But really, it's all about understanding that it's a matter of progress, and you've got to have rules for yourself to say, when I get to this point, I'm going to take myself to this level, right? If you sent an email about signing up, I will reply. Right. Let's go through. Look, don't ask for module 3 or 4 here. I want actual emails, right? Commissions are killing you. I do apologize for that. Everyone email him. Can you shade in the Globex session on the market profile to make it easier to see? Yeah, if you send that to support@jigsawtrading.com, we'll do that. Thanks for the insight. Oh, somebody's given Richard's given my email address now. That's not fair. In your webinar, you did mention cumulative delta. Cumulative delta, funny, I actually spoke to Gary Norden yesterday, and Gary Norden is well known for hating technical analysis, and I talked to him about cumulative delta and the way that I use it. And some people look at delta divergences, and I think that's nonsense. So what cumulative delta tells you, it tells you one thing. It tells you what type of orders people used. This is cumulative delta here. That's all it tells you, right? It tells you whether people use market orders or limit orders, right? So it's basically buy market orders minus sell market orders. Yeah, that's what it's telling you. So it's only telling you what order type people use. So when price goes one way and delta goes another way, some markets are just like that. But the way I talked to Gary Norden, like Mr. Hates technical analysis yesterday, and I said, this is what I do with cumulative delta. If the market's moving up and it's a good up move, and the market starts to move down, but the delta stays flat, it means there's no participation in that down move. And I think that means there's a good chance that there's going to be a continuation. And that's the only thing I use delta for. And Gary said, actually, that sounds quite sensible. Now, if I said to Gary, if price goes up and delta goes down, I'm going to do X, he'd have said, that's stupid, because all delta's telling you is what type of orders people use. But if you just look for delta to be flat, what it's telling you is there's just no interest. So I think the delta can have a good part of your trading if you're trading in a pullback scenario. But again, I think it gets overused, and people put too much stock into it, and people try and create all these one rule trading systems, like market goes up, delta goes down, I'm going to short, right? It's literally it's a one rule trading system, right? Forget everything else about the market. If price goes one way, delta goes another way, I'm going to do this, right? If that was the way trading was, the training programs at prop firms would last half a day, right? Right, Joshua, where's your question? I'm trying to find Joshua's question. Is day trade used on its own or with a trading platform like NinjaTrader? It can be used both. You can use day trader with CKG, Rhythmic, IQ feed, a whole bunch of data feeds, or you can also piggyback NinjaTrader if you like. In your previous webinar, you did mention cumulative delta. We've just gone through that one. I'm now, course designed to drip the information. Yeah, course designed to drip the information to your brain so it sticks. Joshua Haynes, you said, can I look at your question? I'm looking for it. Where was it? Was it right at the time? Earlier this week, you mentioned getting lifetime access to the platform, chat room, and analytics. Yeah, you get the basic, the journalitics access is lifetime. It's the basic version, but it is enough to give you good analytics, and it is included, and as well as lifetime access to the platform. So yes, you do get that. I've been talking for a long time. Right, let me go back down. Right, cool. Where do I get more information about the course? Well, basically, did you get the email today, Ebert, that came out? There's actually a blog post, blog.jigsawtrading.com. If you go to blog.jigsawtrading.com, let me just bring that up there. Blog.jigsawtrading.com, have a look in there. That tells you about the course. Will the access sessions be recorded? Yes, absolutely. They are. Most of them are recordings, but there are recaps to make sure you understand. In the video, you said looking for a 10,000 turn in Delta to show you the market's turned. Yeah, okay. So when a market reverses, and the S&P isn't the same now as when I said this, but basically, when the market reverses, you usually get a big swing in the new direction, and you usually get a big shift in Delta in the new direction. So also Delta can be used to help you identify, was that move a pullback or a reversal? I think we're getting off the topic of footprint at the moment. Cumulative delta. Are some of the footprint strategies that actually is going to be sharing part of your young $1 million in a day traders rate? Yeah, it's they're actually from I think they're from Brannigan. For those that you know Brannigan, you can look it up. Can you change the way that footprints will look? Yes, we're gonna. What we do with software is we release kind of basic version first, and then we let you tweak it. We've got a tilted footprint, which is something that's new that nobody else has used. But yeah, you'll be able to change the way it looks. Yeah, zero trading, that's going to come. That will come in the lessons. You're going to get a much better, a fuller description of that. And I think I got through the questions, right? But if I get a lot of, it's not a 3D view; it's a tilted view that kind of helps you see the prices that are trading against each other. God, let me just try. I don't even know if I've got it. Let me just see if I can. I'm not even sure what version I've got at the moment. 4 or 5 and 3 days. Let me just. Okay, let me just try and bring that up. Give me a second. Yeah, I'm just starting up on the. I don't even know what version I've got loaded because we're in beta at the moment. Okay, I don't have the data loaded, and it's down in loading level 1. You'll see it anyway, right? Other than the DFP course, same as the Axie course, slightly different. We'll have live sessions one day. I need to get back to trading first, Con, because I've been. This whole charting thing has killed me. I just haven't had time. I mean, I'm usually at work I'm usually working till 2 a.m. Most days, but okay, let me show you the tilt. This is a tilted footprint, right? So the way we look at footprint is it's a bit like the dome, right? That you're trading one price against the other, right? So I've always got a bid price and an offer price, and what we're doing here with the tilt is we're showing that this is the bid price and this is the offer price. So they're two different prices. So it's not for everybody, but it will give some people, it will suit some people basically, so that they're always comparing the two prices, because you don't really compare the amount you traded at the same price, because you're never trading at the same price. You've always got a buy price and a sell price. So that's what we've done with the tilt, right? Are the footprints from Ninja going to be part of the plugin for NinjaTrader? No, we don't. We're not going to do that, because one of the things, you know, there's a lot of expense to this. We've spent like a few $100,000 doing this. NinjaTrader is already a charting platform. Plus we use something called the bridge, which we don't want to overload. So the decision we made was, if you're using a bridge to NinjaTrader, then we didn't put in the necessary code to pull charting data to day trader charts. Whether that's the right decision or not, I don't know. But like, you know, if we get enough people asking for it and we can get them to fund it, we'll do it. And so, you know, we'll release it first, get it out there, see what the demand is. You know, nothing we do is like set in stone. So we'll create something, give it to you, and we don't want to over engineer things. What we want to do is we want to give you something that works, that's intuitive, and then let you tell us what it needs, right? And when you tell us what it needs, we will also say why. We'll ask you why you need it. You know, what's the rationale from the market perspective? And, you know, and if there's a good rationale and there's good demand, we'll put it in. But what we're going to do with the charts is, once we've done the footprints, you know, the next couple of weeks releases, we're actually going to let you vote on what you want next, so that you can decide which direction we do it. The upgrades are obviously affecting computer power memory. Is it possible to balance across the PC laptop? Probably about 30% of the code in our application is tuning and throttling. So we actually used a third-party JavaScript-based charting application to create these charts, and we rewrote a lot of it to make it perform, to use some of the performance techniques we use with other stuff. So basically, our goal is no chart should use any more than 1% of CPU. Now, there's going to be, obviously, when you load a chart, there will be a spike because it's got a setup. But once your chart's running, it shouldn't take more than 1% CPU. That's the goal. So, you know, we do not want the charts to slow down the other parts of depth and sales. That would be a catastrophe for us, you know. And so performance is a big thing for us, right? The schedule for the rest of the course, again, you should have it. Let me just let me see if I can drop it into. I'm seeing if I can drop it into the chat. 2 seconds. Right. I don't know if I can do an attachment. Oh, why can't I do an attachment? Anybody know how to do an attachment in Zoom? Zoom. Okay, let me. I'm sorry to babble, but I don't like empty spaces. I don't like empty, quiet spaces. I'm just trying to think how I can share a file. Oh my God, there should be a way to do that, shouldn't there? Disable. Let me try it again. Is there nothing in the chat? Right there. Let me see if this is it. Right, let me see. Let me just bring this up. See if this is the right link. Okay, this is the link. That kind of tells you the course. So let me just put that in the chat. Zoom is for babies. Zoom offered me a 500 user license for $800 and guaranteed that price for life. So as much as it is for babies, I don't know any webinar software that gives you 500 users for $800 for a year. So, you know, and yeah, you know, people offering cracked version of the software. Yeah, I know it happens. It happens with courses, but like, 99% of people are honest and buy stuff, and it's just not worth chasing those people, to be honest. It's more hassle than it's worth trying to chase them. So I appreciate the heads up, but generally speaking, we don't really care, man. We're growing, we're doing well, we've got a nice community, we spend time talking to people that we like. The idea is spending time chasing down some asshole that's cracked the software. It just doesn't appeal, and it doesn't seem to be key in the business. So I really appreciate it, but you know, let them do it, whatever. What day of the market is the market most active to crude? It's the US, obviously the US Open. I mean, 8:30, I think, or it's 8:20, but the US morning usually. Or when Iran sends missiles at Saudi oil fields, tends to get a bit, a bit volatile then. Right, yeah, 8:20 EST. Right, will footprints include absorption? Well, absorption is just big size at a price, right? So yes. So basically, what it is with all of the order flow tools, they're all showing you the same things, but in a slightly different way, right? The footprint, basically, the advantage of the footprint basically is the history, and that's what you're going to be taught how to use that footprint history, and so, but all order flow tools, it's like order flow is just information, and the different tools just present it in different ways. So, if you can wrap your head around that whole liquidity consumption thing, that's what it's all about. Can you overlap footprint on market profile? Well, market profile I find really interesting, because I think market profile is just a really nice way to look at how, if you're looking at the past 10 days and you're looking at market profiles, it's a really nice way to look at those 10 days, and it's an easy way to absorb. And so for history, yeah, I would say for history, yeah, if you're looking at, areas of volume and stuff like that, yeah, there's no reason why you can't use market profile and footprints. Would we overlap a market profile on a footprint chart? No, because it would be impossible to read, unless somebody can suggest a way to do it. Is there a course about professional practice preparing for the day and a review at the end of the day? I don't think there is. I think it's all the technique and footprints. Yeah, I can't see. I can't. If you can send me a drawing of market profile and footprint on the same chart that looks like it would be readable, I'm well up for that, right? And so if you get Matt, if you've got a way, send me a screenshot, because basically they're just chart types. You can put them on the same chart. I failed at art school. Are we still talking about footprints? Yeah, I've not seen it. I don't tend to spend a lot of time looking at other people's platforms. We tend to get copied a lot, and to be honest, I like us to kind of generate our own ideas. But if you want to send me something, yeah, absolutely. But what it will be, it will still be a part of the vote process, right? So we've got a lot of suggestions already, but what we're going to do is take all those suggestions and let you vote for which ones you want done first, because that's kind of the fairest way to do it. So at that point, we're at 1 hour and 43 minutes in. Like I say, I've given you the link. If you want to book a meeting, if you are really, really confused about order flow, I would like to spend 20 minutes with you and just with one-on-ones. I don't want to do it as groups. I want to do it as one-on-ones. There's no charge for it. But basically, I can get you there, and we can talk through it. But basically, I've got a bunch of different analogies I use to explain it, and we can just go through a few different ones, and one of those will stick. Okay. So how to set one up? I put the link in. I'm going to put the link in one more time. Here it is. You got that, Richard? For the next week, please don't just book a meeting with me because you want to talk to me. Just let's give me like next week to get people up to speed on the order flow aspects. They are free bookings, but you are more than willing to make a contribution if you want to. which is a joke, obviously. Yeah, I get, to be honest, I get as much from these meetings as the traders do. If you think about it, right? I've got, I've been on the phone this week. I've been on the phone with Gary Norden. I've had a lot of discussions with Axia Futures. I've got a guy who's a very big spread trader that's just contacted me today. I speak to a lot of people in that world. I need to keep speaking to people in the retail world to understand what issues they're having, and that helps us. It helps me keep in touch, but it helps us make a better product. So I don't want to be on the phone with you for 3 hours. I want it to kind of be succinct, 20, 30 minutes, but like it helps me as much as it helps you. Yeah. A painting for your foot. Yeah, that's a good advance. How far in advance do you need to schedule? Well, you click the link and you pick a time, and that's when the meeting will be, right? And with that, I'm going to say, let's stop the questions because it's now 45 minutes and it's 11:30 at night here. And I think we've achieved what we needed to achieve. Some of you have got it. The guys that haven't got it can book a one-on-one. Did I give you the link to the? Oh, let me make sure you've got the link for the course. Sorry, I didn't put that in there. I think. Right. So that is the course outline. Good luck, and just remember, this is not even though the chat went down, we do want to try and keep in touch with people. This isn't just us putting out information. We do want feedback, and if you get stuck, we want to hear from you, right? And we really do, because we don't want anybody left behind, right? So I wish you all a great weekend. I will put a recording up. It won't be tonight because I'm going to bed. And thanks for all the great questions, and thanks for participating. And we'll be in touch next week. So thank you all.